Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber.
Tuesday, November 15th, 06:52 a.m. New York time. Good morning. Happy Taco Tuesday. We're looking here on the website forexfactory.com for the continuation of this week's activities in the United States, the binary events, the schedule events, economics. Since today's Tuesday, 8:30, we have several large ones. Also Wednesday morning, several large ones, as well as Thursday, several large ones. The large ones I define as A is defined as well too. The bright red ones, then followed by the orange, and then the yellow. So be aware of situations that are occurring if you're day trading or if you're investing long-term. Yeah, it's important because you might buy at the high and then that day or that week, the price might decline huge and then rally back up and you could have bought at a discount. Let's look at the charts. First, pre-market, look at that. Stock index futures are green and the VIX is red. Nice. First, look at the cash indexes, pre-market. S&P 500 monthly chart. Yep, we're making a higher high, higher low, long wick on the bottom. Very nice. The trend is up, currently off the bottom. The weekly chart, let's zoom in here. Currently red. It made a higher high, but we're trading inside the range of that prior week, that big move, big impulse move. Remember, I mentioned this pattern that's forming here. It's a what? It's a head and shoulder. There's two kinds, bullish and bearish. I mentioned what this one was. Looking here at the daily chart. Yeah, yesterday we also made that higher high and we closed red back inside that prior range. Big wick on the top, so I labeled that as a supply zone. And also this big red candle that occurred last week, I labeled the midpoint. So because yesterday, it's that gray horizontal line there. So because yesterday we reversed, I'm potentially thinking we might have further retracement. So I drew a Fibonacci from the top to the bottom. It's interesting. 0.382, which is Fibonacci level, is overlapping midpoint in that daily. Yep. So potential target on the downside I'm looking for, if it comes down that far, is there. That'd be interesting. Yep, potential trade idea is occurring there. And the 50% retracement, which is not a Fibonacci number, which is inside still. And the 0.618 is in that gap. Let's go look at intraday on the futures. Looking here on the 4-hour candles. I shared this the past several days. We had this huge demand zone, buyers. I drew that off that big wick, and I was expecting this to be retested, I mentioned prior. So that retest came yesterday. Very weak. Tested it a little bit, rejected it. That was good. That was good. So if you're bullish, that was a good place. Also mentioned we had a supply zone up for sellers. We tested that, made a little bit higher, rejected it, and closed inside. Continuation in this tight consolidation. That was good too. So we already had documentation, history, that this level area zone was acting as a sell-off for shorting. And here is a buying zone, demand zone. And look what happened overnight. Oh, let me also highlight the Asian session, the Tokyo Asian session opening here. Blue vertical line is 8 p.m. New York time. Yeah. So I didn't take any trades last night. Disappointed, so I should have. Did it. Yep. So inside candle broke above it. That was a nice entry. Let's go take it to the faster time frame. Looking here at the 15-minute. Again, that vertical line represents the 8 p.m. Asian session. Let me double check, make sure it's 8 p.m. Yes, it is. So here, this 1 hour, that was the opening at 6 p.m. Because remember, the futures close at 5 and reopen at 6. Look at that bearish pin bar, retraced lower, lower. Never took out the low with that inside candle. Again, nice turnaround. So disappointed I did not take that trade last night. It was a wonderful setup, and I avoided it. Several singles here showed why I should have taken it from that higher time frame. I told you, rejecting on that 4 hour. Oops. Like I mentioned, this one was a good one. Yeah, disappointed. So back here on the 4 hour, I also mentioned that on the upside, I see a potential sell-off, be concerned about the 4,000 level. And that's what happened last night. They rejected it without even going up to testing it, just shy of it. So never made it all the way up in here. Big round numbers. Remember that 4,000 in quarters, 39.75. Significant numbers, levels. So going forward, I'm still using these key levels, but now I'll take it down to the faster time frame and scalp it for the day. Day trade. So we'll leave this here on the, on the 1 hour. Remove this. And we're looking for if this is going to have potential retests higher. Why? Because here, you had a new level. There, broke above, bearish pin bar. And then the reverse, much fake out here on these two 1 hour, this 1 hour bar and that 1 hour bar. And then you made a higher high, similar candle, big wick, higher high, big wick, small body, divergency, still rejecting that 4,000. Current candle, which gets done at 7 p.m., like in 2 minutes, still hasn't taken out that high, but it made a lower low, lower high, so possibly trend reversal. Even though the candle's still green, lower high, lower low. That being said, opportunities, because if you're still bullish, one would look for a retracement and look for entry. Well, I think this candle painted a good picture here. Why? Because it made a higher high, higher low, big wick on the bottom and broke above. So these big wicks on the bottom, they were short-term reversals. But again, the momentum still continuing on the upside. So I'm looking for us to break above 4,000 today and test somewhere in here. Yep. And again, this is also in a consolidation phase. Yep. Or look, we went below, tested that low there, even tested back inside here, rejected that because I have that huge wick on the bottom. Again, it's not done yet. You have 1 more minute. But again, it's a sloppy consolidation here, but it's grinding higher, 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 higher. Here is big bodies, almost all bodies, consolidation. Look at that big wick. Was tested, breaking up, consolidation. Now we have the new candle forming at 7 p.m. So again, this was giving me a signal down here that we rejected here, but also be concerned. Made a lower high, lower low, consolidation phase. Okay. Enjoy your day. Tuesday, November 15th, 5:40 p.m. New York time. Yep, the U.S. stock markets close and the future markets close. Futures market will open another 20 minutes. Looking here on the daily chart, S&P 500. We closed red. We made a higher high and higher low. So yesterday, I mentioned this red candle had this huge wick on the top. I was looking for it potentially retested. That's why I drew that red horizontal supply zone. And we did. We tested it today. We broke above it. We traded below it. What's interesting is that we closed inside of it. Also, I mentioned this big round number, this red horizontal line, 4,000, big round number. We tested it yesterday and today. Both times we closed below it. I mentioned a few days before too, that key level was going to be a struggle I was anticipating. And it happened. Yeah, it happened. So this is a consolidation here, and there's small trading ranges in these candles compared to this one last week. Huge impulse move up, which had that gap up. See this blue area? That's a gap from there to there. I also labeled the midpoint on the daily. Looking on the 30-minute chart of the SPX, 9:30 a.m., I labeled the 8 delta on top, which is the call, and the 8 delta on the bottom, which is the put. Well, the 8 delta on the top never got tested. That's good. If that was short strike to use, max profit. The one on the bottom did get tested, but it closed above it. So both, if they were held to close, would have been max profit. Yep. Let's go look at the futures now on the daily chart. Again, the futures did even more dramatic price range. This was yesterday, that big red candle. And look at today. Again, huge wick on the top. Huge wick. Small little wicks on the bottom. Small little bodies. It's a consolidation. Very interesting what's occurring here. So the takeaway is there are people willing to buy at the higher price because it made a higher high. But again, get it smacked down. And they're still holding here. They're holding here. Let me put the numbers. There we go. Look at that range. Solid red line, 4,000. The dotted line quarters, 39.75. So that range below 4,000, above 39.75 is interesting. There's a lot of price activity there. Buying or selling, there's a lot of it occurring here. Let's take this to the 4-hour chart now. Last week and this week, I mentioned this red candle, huge wick on the bottom. I drew that big green zone, demand zone of buyers. And wouldn't you know it, we tested it today and rejected it. So again, demand zone green areas, acting as buyers in the history, and it repeated again. Nice. So if you were watching this during the daytime and did bull put spreads here with the options that expired today, SPX, ES, either one, did short strike down here very well. We did close red, made a lower high, lower low. And again, we already know we closed before 1,000, but that big wick is very interesting here. Yeah, but then the trend is down. And we have the supply zone up here. Let's take this into the hourly. There we go on the hourly. This being the, sorry, this is the 2-hour one, being from the 1 o'clock one that started here. Look at that huge wick, like a spring, bullish spring bar. So one, and an inside candle there too. So it'll be interesting to see how the break's going to be above or below here. So this 4-hour candle, we're back in the 4-hour candle. A break above here might consider trade bullish. We'll put spreads down here. But again, this big wick now might get retested. So one, I could do this. And I got 3 times test. Well, the first time was created in these 2 other retests. So I think I'll do this for now. Draw a zone. Again, this is demand zone. Buyers have been here. 4H, because that was the time frame I drew it on. Let's keep it like that. Undecided if adjusted or not. Keep that right now, because I'm expecting this to potentially get retested. Let's take it a 2-hour. There we are on the 2-hour now. Same thing. Potential breakouts above or below this inside candle. Maybe trades I'll be looking at to see how things go. On the 1-hour. Look at these inside candles, so many of them. And they got broken for trade opportunities. So that was a huge impulse move down. But look at these. This 1-hour candle is red one. This yellow one, 1-hour candle. Big wicks on the bottom, both of them for a 60-minute period individually. Huge wicks on the bottom. Testing that demand zone, rejecting it. Great opportunity for multiple trades there if you were doing the fast trades. And let's put this on the, that's the half an hour, but let's put it on the 15-minute. Let's put this 15-minute on 5 days. And you'll see better why I'm showing 5 days. Massive consolidation since this was Thursday. It had that big move up. So this was Thursday night, Friday morning, Friday, Sunday night, Monday morning, Monday. Again, this was Tuesday, Monday overnight, Tuesday morning, and today. You even see on the 15-minute, if you're using the faster time frame, very interesting what's occurring here. It's got history. Most of that trading I mentioned occurring down here. So there was, let me zoom in. If you're using a 15-minute candle, again, when we closed here, that was yesterday, and then overnight. There's a slow grind here. Zoom in. I think in an earlier video I mentioned, I hesitated. I did not take that trade here. I think it was on the 1 hour. Yeah, I was showing you here where I didn't take that. This is a 1 hour chart. Disappointed. And back here on the 15-minute. So you can see small little wicks grinding up. There's bullish bias. This 15-minute candle here, zoom in again. When we went into this, again, drew this supply zone after, but this big red line here on the daily midpoint. Zoom out again. It took so many days to finally run up here, retested it. Now zoom in. Look at that, rejected it. So if you were using 15-minute candles and saw that rejection, one could have done bear call spreads right up here. Again, with options that expire today. So it's doing 0 DTE, sitting on hands, waiting for those opportunities. It worked out nice. That would be doing the ES. Again, this was at the 8:30 news event before the stock market opens. So you would have been using this with the options on futures. Yep. Down here again too. Wow. So a lot of volatility in the grind, but we already see clearly where the defense is, where the supply zone is. In the earlier video, I showed again the events we got going on this week. Okay, many thanks for watching. Thank you, as always, for spending just a little bit of your time with me. If you've gotten value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on my PayPal or Venmo. You can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe and leave a comment, please.